Hi, I'm Rick Darvis with Financial Life Coach. Today I'd like to show you how our one-on-one system works with the Financial Life Coach. This is a three-step system. Okay, but the first step in this system is to find out what your problems are, such as reducing taxes, reducing the amount of interest and pay and debt that you're paying off, the amount of college costs, reducing those, the amount of insurances that you pay, the various types of insurances, reducing your overall expenses to increase your cash flow, and add to your retirement with minimizing or eliminating risk. That's step one. We want to find out what your problems are. Step two is we want to show you how we come up with strategies to help solve your problems. So let me switch to my software to show you how this works. Here is the copy of the infamous 1040 form that most of you are familiar with. Basically, this 1040 form tells you a lot about a person and the family and their financial situation. So let me just show you how this works. Basically, we will get a copy of your last year's tax return, okay? Then, based on where you had information on this return, we'll check certain boxes. If you had dependents, okay, we'll check the box, okay? Let's say you had wages, check the box. We don't need to know how much in wages, we just need to know that you had wages. It's not so much the amount, but it's the strategy that counts. Let's say you had a little interest income, you had some dividends, okay? Let's say you had a little rental property down here on line 17, so we check the box that you had rental property. Let's say you had an S corporation, your business was in an S corporation, okay? Now let's go to page 2 of the 1040 form. Let's say on line 40, you itemized your deductions and instead of taking the standard deduction, so we check the box that we used itemized deductions. Then down at the bottom, we have 5 different strategy types or different categories of strategies. We have cash flow, financial aid for college, investment strategies, retirement strategies, tax reduction strategies. These different categories will soon be expanded to 15 different categories to include cash flow, charitable gifting, transition planning, divorce planning, wedding planning, long-term care planning, and so on. There'll be another 10 more types here, but for now, let's just look at these 5. Let's say that you want to increase your monthly cash flow. Check the box. Let's say you want to get more financial aid or cut the cost of college for your children or grandchildren. Check the box. Let's say you wanted some tax reduction. So you would check the box. So based on what boxes you checked here and what boxes you checked on your 1040 form, the software will produce strategies that fit that profile. Okay? Because on line 6, we said we had dependents. Here are some financial aid strategies. Okay? You can increase their financial aid eligibility. Here are some tax reduction strategies. Okay. Now let's go to line 7. We check the box. We had wages. So here are cash flow strategies based on, you said that you had wages, or indicated that. How are these strategies laid out? In the format of the topic, a brief description of the topic, an example of the topic, and your potential savings and benefits. So that's how these are all laid out again. We have the topic, brief description of the topic, an example of the topic, and potential savings and benefits. So this is these are some of the strategies based on the boxes that we checked on our 1040 form. Okay, and the different categories: cash flow, retirement, and cash flow, tax, and financial aid strategies. So let's go down here and see how many strategies we come up with. Okay. let's see, go all the way to the bottom. Here we have 474 strategies. Now, we're going to use all of these 474 strategies in your situation. No, my team of experts and I will go through and pick out the most appropriate strategies based on your what you said your problems were to help solve those problems. So this is step 2. Okay, step 1, remember, was identifying your problems or your what goals you wanted to reach. Here are some strategies that we can use to develop a plan to help you with your problems. The third step is we put it into a little Excel spreadsheet to, I guess, very simply show you how you can solve your problems without changing your lifestyle. I think that's important to a lot of people. We don't want to change our lifestyle to solve our problems. Okay, so let's assume we're on the right-hand side. This is our investment account or our savings account balance, and it starts out at zero. Okay, so just like any checking account, expenses are paid out of this, and income is added to it. So let's look over here on the far left-hand side. Okay, one of the goals of this particular person was to buy $1 million worth of rental real estate. He felt he could get a 4% return on it, so he thought he could get net $40,000 in rent income. So the rent income of $40,000 a year goes into the checking account, right? Also, we felt with our strategies, some of which we developed with our software in the last section, we could reduce his taxes by $100,000 a year. So that additional tax refund check from the IRS would go into our checking account. We felt that because of the amount of interest this person is going to be paying, because he was going to finance the rental property, he was going to, rather than use his money, he was going to use the bank's money to finance the rental property, the $1 million worth of rental property, and that $10,000 in tax benefits or additional tax refund would go into his checking account. What comes out would be a $60,000 annual payment on the rental property. Let's assume it was paid over a 30-year period. It was set up on a 30-year loan. Okay, so here are our yearly payments, and again, they come out of our cash balance or our checking account balance over here. Okay, notice year 5, our payments go up to $96,000 a year. Why is that? Because at this point, he's going to have children that are going to start attending college, and we're going to assume that it's going to cost him $500,000 to send his kids to college. $500,000 with the price of these elite privates anymore, even some of your publics, it's, the cost is overwhelming. So he's going to borrow for the cost of college because, again, he doesn't want to sacrifice his current lifestyle by taking money out of his own pocket. He's going to borrow for it and pay it off. 30-year student loans. Okay, so again, the loan payments here come out of your cash balance. The income from the rental property goes in. Your tax refunds of $100,000 and $10,000 a year also go into your cash account. At the end of the 30-year period, he'll have $5.4 million in additional money in his retirement account. Okay, notice that by year 22, the payments to the house for the rental property and the student loans are paid off, not in 30 years, but 22 years, using a concept that we've developed called the equity recapture concept. So we're out of debt, not in 30 years, but 22 years. So basically, we've kind of, again, reduced the amount of debt, okay, and the amount of interest that we're going to be paying by getting out of debt 8 years sooner. Okay, we reduced taxes. Again, that was some of our goals, right? We've increased our retirement. Okay. Another thing that we've looked at is if we're looking at an investment, this is at 5.4 million based on a 5% rate of return. If we could only get 1% or let's say 2% on our money instead of 5%, it would be $3.2 million. So again, here's where looking at what type of investments you have or savings vehicles that you have makes a big difference. And again, You want to minimize the risk. You don't want to lay awake at night wondering what the stock market's going to do to your retirement. So 3.2 million at 2%. If you can get 5% on your money, that will go up to it's almost $2 million more. So again, in summary, we've increased their retirement accounts. We've got them out of debt sooner. We've reduced their taxes, and without changing their lifestyle. Because remember, our beginning balance in our investment/savings account was zero. Okay, we didn't change our lifestyle one bit, and now we have $5.2 million in additional money in our retirement account. We have $1 million of rental real estate paid off, and we've got our kids' college paid for. So basically, that is how the system works, the one-on-one. So I'll be happy to talk to you about your own individual situation. Thank you.